Novavax Inc. is currently trading at $8.08 USD, showing a positive move of 0.33 or 4.24% so far today. While the broader market might be looking at the latest tech runners, something much more calculated is happening under the hood of this biotech name. The common narrative suggests that the peak for vaccine companies is a distant memory, but the reality is that Novavax has quietly transitioned from a struggling manufacturer into a lean, high-margin licensing and R&D firm. This shift is most evident in their recent partnership with Sanofi, which essentially offloads the expensive commercial and manufacturing burdens while keeping Novavax eligible for massive milestone payments throughout 2026. Most retail traders checking their Robinhood stock trading accounts might see a volatile small cap, but the institutional side is looking at a company that just triggered a $25 million payment and has another $75 million catalyst locked in for the completion of technology transfers later this year. The expectation from the general public is that without a global crisis, companies like this have no path to growth. However, the reality is that Novavax is now essentially a platform company. Their Matrix M adjuvant is being used in various applications, and the market is completely discounting the possibility of their COVID-influenza combination vaccine succeeding in late-stage trials. While the crowd is busy debating the next move for Apple stock or searching for investment help for their Schwab Intelligent portfolios, the smart money has been observing the heavy consolidation in NVAX. The stock is currently fighting through a key resistance level, and the volume we are seeing today suggests that institutional players are starting to position themselves ahead of the next round of clinical data. If you look at the recent trading sessions, the activity on platforms like Interactive Brokers and the Fidelity trading platform shows a clear divergence. Retail sentiment has been mixed, often influenced by short-term price swings, but the large block orders tell a different story. We have seen significant positions held by firms like Shaw Capital and even Sanofi itself. This isn't just a speculative play, it's a strategic stake in a company that has successfully cut its operating costs by over 50% compared to previous years. When you look at your SoFi active investing dashboard, you might see the volatility, but if you look at the cash position, Novavax is holding more cash than debt. This provides a safety net that many other small-cap biotech firms simply don't have right now. The intraday movement of 4.24% today is particularly interesting because it comes on the back of increased chatter regarding the 2026 vaccination season. Sanofi has taken the lead on commercialization, which means Novavax no longer has to worry about the logistics of getting shots into pharmacies. They simply collect the royalties. This is a far more sustainable business model than the one they operated under 3 years ago. For those using the Fidelity mobile app to track their individual brokerage accounts, the question is no longer about whether Novavax can survive, but how much they can earn from their existing intellectual property. The market is currently pricing them as a company on the brink, but the balance sheet suggests they are a company in a state of controlled refinement. Let's talk about the pressure cooker that is the current short interest. Novavax is consistently one of the most shorted names on the Nasdaq, often seeing short interest north of 30%. This creates a massive gap between expectation and reality. The bears expect a slow slide into irrelevance, but any positive news regarding the Sanofi milestones or the progress of the Phase 3 combo trials can trigger a violent move higher. We've seen this before in the biotech sector, where a heavily shorted stock finds a floor and then rips through several layers of resistance as shorts are forced to cover. If you are using SoFi Invest or checking the Robinhood app for intraday swings, you know that this level of short interest usually precedes a major volatility event. Comment below how many shares of Novavax you currently hold and what your average price is. I want to see how many of you are still holding through this transition and how many are looking to enter at these levels. For those who are focused on online investing or searching for the best investing sites, it is important to understand the actual business of Novavax. They aren't just a COVID-19 company. They specialize in protein-based vaccines, which use a different method than the mRNA technology used by competitors. This protein-based approach is often preferred by certain demographics and has different storage requirements, making it a vital part of the global health infrastructure. Their proprietary Matrix M adjuvant is a substance that enhances the immune response, and it is currently being used in various other vaccines, including a malaria vaccine that is being rolled out in several countries. This gives them a diversified stream of potential royalties that has nothing to do with the seasonal flu or COVID. When you look at your Fidelity brokerage account or your Interactive Brokers platform, you'll notice that Novavax has been focused on site consolidation. They have closed several facilities and reduced their headcount to align with their new strategy. This was a necessary move to reach profitability. The market often hates seeing a company shrink, but in the world of self-investing and individual brokerage management, we know that a leaner company is often a more profitable one. The expectations were for a total collapse, but the reality is a disciplined restructuring that has left the company with a much more manageable burn rate. Looking at the broader market context, the interest in NVIDIA stock and other high-growth tech names often overshadows the value hidden in the healthcare sector. However, the macro pressures of 2026, including potential changes in government healthcare spending, could favor companies that provide cost-effective and traditionally manufactured vaccine options. If you are managing your own Fidelity wealth management strategy or using a SoFi robo-advisor, you might notice that healthcare is starting to look attractive again as tech valuations become stretched. Novavax, with its current market cap hovering around the $1 billion mark, looks like a potential acquisition target for a larger pharmaceutical company looking to bolster its vaccine pipeline. The trading volumes we are seeing today are higher than the 30-day average, which often indicates that a new trend is forming. Whether you are using Robinhood investments for fractional shares or managing a large portfolio on the Interactive Brokers trading platform, the price action at the $8 level is critical. This area has acted as both support and resistance in the past. A sustained move above this level could open the door for a run towards the $12 analyst targets we have seen recently from firms like Cantor Fitzgerald. These analysts are starting to see the value in the Sanofi partnership that the broader market is still ignoring. The expectation was that Novavax would need to raise more capital by now, but the reality is that the milestone payments from Sanofi and Takeda have kept them afloat. This has reduced the immediate threat of dilution, which is always the biggest fear for those involved in online investment. When you look at Fidelity IRAs or other long-term investment vehicles, you want to see a clear path to cash flow. Novavax is closer to that path now than they have been in years. Their agreement with Sanofi includes a co-exclusive license to use Novavax's COVID-19 vaccine and the Matrix M adjuvant in combination with Sanofi's own flu vaccines. This is a massive endorsement of their technology from one of the biggest players in the world. As we look towards the rest of 2026, the catalysts are clear. We have the technology transfer milestones, the progress of the Sanofi-led clinical trials, and the potential for new licensing deals for the Matrix M platform. The risks remain, of course. Clinical trials can fail and vaccine uptake can be lower than expected, but the expectation of failure is already priced into the stock at these levels. The reality of even moderate success could lead to a significant re-rating of the company's valuation. If you are looking for investment help or researching through SoFi ETFs and Fidelity mutual funds, you'll find that the biotech sector is always a high-risk, high-reward environment, but Novavax has unique characteristics that set it apart from its peers. The institutional activity is the final piece of the puzzle. When you see names like BlackRock and Vanguard maintaining or increasing their positions, it suggests a level of confidence in the long-term viability of the company. These aren't traders looking for a quick 5% move. They are long-term holders. For the individual investor using the Robinhood app or SoFi Investing, following the footprints of these giants can provide a bit more clarity in a noisy market. The current price of $8.08 USD represents a point where the risk to the downside seems limited compared to the potential upside if the 2026 strategy fully matures. To summarize the central insights of today's movement, Novavax is successfully navigating a transition that many thought was impossible. The market's expectation of a slow decline is being challenged by the reality of a profitable partnership with Sanofi and a significantly improved balance sheet. While most people are distracted by the volatility of Tesla stock or the latest AI trends, Novavax is quietly building a foundation based on royalties and intellectual property. The contrast between between what the public believes, that Novavax is a relic of the past, and the actual financial restructuring taking place is what creates the opportunity here. Whether you are trading through Interactive Brokers, Fidelity, or Robinhood, the key is to look past the ticker and understand the structural changes that are driving the value. The path forward is not without hurdles, but the disciplined approach the company has taken recently suggests that they are no longer just surviving, they are preparing for a much more stable and profitable chapter. Would you like me to analyze another stock for you? Disclaimer: the information provided in this video is for educational and informational purposes only and does not constitute financial, investment, or legal advice. Investing in securities involves significant risk, including the potential loss of principal. Always perform your own due diligence or consult with a qualified financial advisor before making any investment decisions. If you found this analysis helpful, please make sure to like the video, leave a comment with your thoughts, and subscribe to the channel